Here's my 2024 Homeowners Guide to Refinancing. The first and most important question that people ask me is, what is a refinance? It's a very valid question, and for some people it just makes sense, but for others, maybe younger homeowners who've only purchased one house, they just don't know. So when you buy a home, if you're not blessed enough to pay cash for that home, you might have to go out and borrow money. We call the borrowing of money to purchase a home financing a home. So when you borrow that money, you're securing a particular interest rate, and as time moves, interest rates sometimes come down. So how do you take advantage of that lower interest rate if you're a homeowner who has a mortgage? Well, you could try calling your mortgage company and just asking them to lower the mortgage rate. That's not going to work. Maybe they're kind people, but the rules say, nope, this is the rate you locked in at. If you're on a fixed rate mortgage, that's the rate you're going to keep throughout the length of that mortgage. So are you just out of luck? Are you just going to have to pay this interest rate for the entire 30 years of your loan? The answer is no. This is when you take advantage of a refinance. We are going to pay off your existing loan with a new loan at the new lower rate. Think financing on the front end and then refinancing to get the lower rate. Now, refinancing can be used for a lot of reasons, and there are several good ones that I want to hit on today. Number one, the most common reason to refinance is to get a lower interest rate. Now, everybody thinks about, hey, I want a lower interest rate, but really, you don't care about your interest rate. You care what your interest rate does for you. Your interest rate is going to do one of a couple things. It's either going to save you money by giving you a lower payment by getting a lower rate, or it's going to give you an opportunity to build equity faster in your home by making the same payments, but to a lower interest rate. So you don't care so much about what my interest rate is. You care more about what a lower interest rate will do for you. So again, the number one reason that people refinance is to get a lower rate, meaning make a lower house payment. The number two reason we see people refinance is that they want a shorter term mortgage. So let's say you bought your house 5 years ago and you did a 30-year loan. You have 25 years left on your mortgage, but then interest rates drop and maybe you can refinance now to a 20-year mortgage and have a lower rate and the same payment and pay your house off 5 years faster. That's going to save you a lot of interest, not having to make interest payments for that 5 years. So you can lower your payment today, or you can save money over the life of the loan by going to a shorter term. And then the number three reason, and this is also a popular one, is getting money out of your home to be used for some other purpose. Well, what might I use that money for, Michael? You might ask. Well, there's several reasons. The number one thing people do with that money is put it back into their home through doing home improvements. They'll remodel a kitchen or remodel a bathroom or add additional square footage to their home, making their home worth more money. So that's the number one thing that you can do with that cash. Number two thing we see people do a lot of times is fund a child's college education fund. So they'll take the money out of their home and they'll put it in a college education fund for their child or maybe even their grandchild. That money will grow, it'll earn interest, it'll get bigger, and hopefully they fund their child's education. And then maybe the most important reason you would take cash out is in order to pay off other high interest rate debt. Let's say you had some unfortunate circumstance in the last 6 months and you had to run up $20,000 or $30,000 worth of credit card debt. Taking money out of your mortgage. So let's say you owed $200,000 and your house was worth $500,000. We could refinance you and do a new loan amount of $250,000, which would give you $50,000 to use in one of these other areas. That's what I mean when I say taking money out of your house or out of your mortgage. So you could take that money and pay off your $30,000 worth of high interest credit card debt, and you would walk away in a much better financial position. How long does it take to refinance my home? Well, the mortgage process is basically the same whether you're purchasing a home or refinancing a home. So it doesn't take any longer typically in a refinance than it does in a purchase, and it could actually be quicker. it's possible that you won't even need an appraisal this time around, because the database for the companies that insure all of our loans grow every month, and they may have enough data with intelligence, artificial intelligence, to estimate the value of your current house and be confident that value is correct. So not having to wait on an appraisal can save you closing costs and can make the process faster. So let's talk about those closing costs. What kind of cost or fees am I going to pay in order to do this refinance? Well, there's a variety, but basically they're going to be the same fees that you paid when you purchased the home. And in reality, it might actually cost you a little bit more to refinance your home than it did to finance your home, because the seller may have paid some of those fees on your behalf when you purchased a home. And in this situation, you don't have a seller. So you're paying all the attorney fees or all the title fees, and there's no one to help offset those costs. So the closing costs, general rule of thumb, are going to be somewhere between 1% and 3% of your loan amount. So that's the fees. And then we also get asked, well, what are the benefits of refinancing? Well, we talked about that. Lower interest rate means lower payment, savings over time, or paying off some other debt. So if we know what the benefits are, then what's the downside to refinancing? There's two potential downsides to refinancing. Number one, you might end up taking a longer loan or going back to your original 30-year fixed mortgage. Now that may be okay. It may be something that you're willing to do in order to have a lower payment every month, but it just means you might pay a little bit more interest over the life of your loan when you do that refinance in exchange for getting a lower payment today. So you're just weighing the pros and the cons. The other potential downside, or stated downside, is the closing costs that you're going to pay. Now, you don't necessarily have to pay those closing costs out of pocket. It may be possible to add those to the new loan amount so that you're not bringing any cash to the closing table. So really, that's a lot to cover in a very short period of time. It probably has created a lot of questions for you. Weber Mortgage would love to answer those questions for you. There's several ways that you can reach out to us. You can certainly call us, you can email us, or you can just drop a DM straight to me, and I will be happy to respond and answer any of the questions that you have. So that's my 2024 Homeowners Guide to Refinance.